Hey everyone, it's Chase Vickers again with another video from the MoonShot Money team. Welcome back to our channel. There has been a recent phenomenon in the investing world and it's white hot right now. And that is the SPAC category, Special Purpose Acquisition Companies. Some names are absolutely on fire and some are just starting to heat up and glow. In this episode, we're going to quickly look at 3 companies that just might be moonshots in the making. Are you ready? Let's go. What is a special purpose acquisition company, or a SPAC? A SPAC is a company with no commercial operations, formed strictly to raise capital through an initial public offering, or IPO, with the ultimate goal of acquiring an already existing company. Special purpose acquisition companies are also known as blank check companies. In recent years, SPACs have gone mainstream, attracting big name underwriters and investors. Some very successful mergers have taken place in the last few months. You've probably heard of Virgin Galactic, ticker symbol SPCE, DraftKings, ticker symbol DKNG, and Nikola, ticker symbol NKLA. All 3 of these companies have been high-profile moneymakers for patient investors who are willing to invest early in the SPAC. Virgin Galactic is up over 40% since its public debut, DraftKings is up over 200%, and Nikola is up over 90%. So you can see how rewarded the patient investors have been that invested in 1, 2, or all 3 of these. Well, that was then. What about now? Are there any options for us today? We believe there are several moonshots in the making, but let me remind you, as always, we're not financial advisors. This is simply for educational and entertainment purposes only. You'll have to do your own due diligence and decide for yourself before you invest your hard-earned money. This video is not meant to dive deep and give you a file cabinet full of information. We only want to introduce you to these possible millennial monsters. Before we pull back the curtain, let me ask a favor. It takes a lot of time and effort to bring you these videos, and all we ask in return is a like. And if we've earned your trust, join our community of investors and subscribe. Okay, let's quickly look at 3 very promising SPACs. Number 1, Forum Merger 2, ticker symbol FMCI. Forum Merger 2 is set to combine with a company called Atella International, which owns the Tattooed Chef brand of plant-based foods. This reverse merger will function as Tattooed Chef's de facto IPO sometime in Q3 of 2020. In a press release a few weeks ago describing the planned merger between Forum and Atella, the Tattooed Chef was described as an innovative plant-based food company with an established brand, as well as a private label presence. It's estimated to have $148 million in revenue this year, growing 50% to $222 million next year. Tattooed Chef will become the second pure-play stock in the millennial favorite and well-beloved plant-based food company behind, you guessed it, Beyond Meat. Why do many believe Tattooed Chef is a table-pounding buy? Number 1, their product line. Tattooed Chef has great tasting plant-based, extremely low carbohydrate foods. Low carb, plant-based foods may bring a little hope to America's type 2 diabetes problem. Please take the time to do some research here on the health benefits side of these great products. Some of their products include cauliflower crust pizza, cauliflower mac and cheese bowls, enchilada bowls, Mexican street corn, and so on and so on. They also have many new recipes in the pipeline. You can already find these great products in many Walmarts, Sam's Clubs, and Costco. Did you hear that? They already have a presence with the big dogs. Trust us here. You need to do your homework and take a very serious look at FMCI Tattooed Chef. Remember, similar product company Beyond Meat had a parabolic stock price run from $25 per share on May 2nd, 2019 on the day it was listed to $230 per share by the end of July. That's over 800% return in a matter of days. Next, we want to look at OPES acquisition, ticker symbol OPES. OPES and BurgerFI International LLC jointly announced recently that they have entered into a definitive agreement at a $100 million purchase price to combine and form BurgerFI International Inc. The transaction will introduce BurgerFI International Inc. as a NASDAQ-listed public company in the near future. BurgerFI is one of the nation's fastest growing better burger concepts and is expected to trade on the NASDAQ under the ticker symbol BFI upon closing of the business combination. BurgerFI is a fast casual better burger concept with a cult-like following. The brand is comprised of approximately 125 corporate-owned and franchise locations across 23 states domestically, including several restaurant locations on college campuses and in airports. As consumers seek a truly better burger experience and ingredient transparency, BurgerFI delivers American favorites made with 100% natural American Angus beef that has never been exposed to any growth hormones, steroids, antibiotics, chemicals, or additives. Approximately 1% of U.S. beef meets this strict standard. BurgerFI is committed to freshness, so their Angus beef is never frozen. Listen to this. CBS News reported in late 2018 that McDonald's, Burger King, and Five Guys, among 22 burger chains, were given an F score over antibiotics in regards to their beef. Only 2 chains, Shake Shack and BurgerFI, received an A rating. Both companies currently only serve beef raised without antibiotics, the report says. BurgerFI further differentiates itself from its competitors by offering its award-winning VeggiFi burgers, vegan Beyond Burgers, which is 100% plant-based, and free-range all-natural chicken, along with fresh-cut fries, double beer-battered onion rings, and premium custards and shakes. BurgerFi restaurants feature an inviting, next-gen look and feel, appealing to consumers of all ages seeking an engaging, high-quality dining experience. Each restaurant is designed with an emphasis on sustainability and a reduced carbon footprint. Stores contain chairs made from recycled Coca-Cola bottles, tables made with reclaimed wood pallets, energy-efficient fans and light fixtures, and more. A comparable restaurant chain that has been this product quality conscious is Chipotle, ticker symbol CMG. If you had invested just $1,000 during Chipotle's IPO back in January of 2006, that investment would be worth over $45,000 as of May 2020, according to an Investopedia article. And lastly, let's look at Tortoise Acquisition, ticker symbol SHLL. Tortoise was created by a team of veteran energy industry executives and investors with a goal of finding and investing in one or more good businesses related to their shared area of interest, renewable natural gas. On June 19th of 2020, Tortoise Acquisition announced plans to merge with a company called Hyliion. What is Hyliion? Allow me to quote directly from a recent article by Motley Fool. Hyliion, founded a few years ago by Thomas Healy, is creating electric and hybrid powertrains for heavy trucks. CEO Healy, a former auto racer and Carnegie Mellon trained engineer, saw an opportunity to apply hybrid electric technology to existing Class 8 tractor-trailer trucks in a cost-effective way. The company has 2 product lines. One, which is shipping right now, is a system that turns in an existing diesel-powered heavy truck into a hybrid, increasing its range and efficiency. It can be retrofitted to existing Class 8 trucks from any of the major manufacturers. Its second product, called Hypertruck ERX, is a complete electric drivetrain for Class 8 trucks with a twist. It doesn't require a huge battery pack. Instead, a Hypertruck system is designed to be recharged while the truck is underway via the natural gas powered generator or a hydrogen fuel cell. Here's how it works. Renewable natural gas, RNG, fuels the generator charges the batteries power the e-motor drives the rear axles and provides regenerative braking according to Hyliion's website. 0 to 60 in 20 seconds, fully loaded at 80,000 pounds using up to 100% RNG. Hypertruck ERX electric power generation is up to 35% less expensive than diesel. When fully loaded at 80,000 pounds, Hypertruck ERX can travel over 1,300 miles, charging its battery en route. And can be refueled in 10 minutes or less. Hypertruck ERX is lighter than any diesel or fully electric Class 8. Fleets can haul more freight, not battery weight, giving an even better return on investment. Wait, so it's like Nikola, right? Hyliion isn't exactly a direct competitor to Nikola. However, while both are hoping to disrupt the heavy truck market with greener products, Hyliion, unlike Nikola, isn't planning to build complete trucks. Instead, it's selling powertrain solutions to existing makers of big rigs, and Hyliion's powertrains are hybrids. Think of this: if trucking companies could go further with great cost savings and higher profitability, some of those cost savings could get passed on to us, the consumers, in a food and necessity final cost. Just something to think about. Full disclosure, we are invested in all three of these special purpose acquisition companies and plan to buy more shares leading up to the mergers. FMCI, or Tattooed Chef, up over 30% in the last month. OPES, or BurgerFI, up over 60% in the last 30 days. And SHLL, or Hyliion, up over 185% in the last month, are all three poised to continue to move up in price as they head towards their mergers. Moonshots, we think there's a great chance. Now let me remind you, they're extremely risky investments, so never invest more than you're willing to lose. Please do your own homework. We just bring you our ideas, tell you what we're doing, but there's a whole lot to like about these three companies, and we've just scratched the surface. We hope you've enjoyed this video and found it informative. Give us a like, and if you want more great content like this, join us by subscribing below. Have a great day, and remember, if you're not interested in your money, someone else is. See you next time.